I think this is the most important year for Bitcoin that has ever existed. We are probably days away from a series of ETFs being approved. And so this is the moment for Bitcoin to use that old term, cross the chasm and really see mainstream adoption, where our parents and our grandparents understand what it is, can buy it, and then do buy it. And I think that if all of this comes to pass, Bitcoin will be a part of the traditional financial lexicon by the end of 2024. So that is my most anticipated trend of the year.
Chamath Palihapitiya is an extremely successful entrepreneur and investor. So much so, he's a billionaire. Not only was he an early senior executive at Facebook, but he's had some huge success as an investor. Some of his best early investments include Slack, Palantir, Virgin Galactic, the Golden State Warriors, and of course, Bitcoin. In his latest podcast, Chamath revealed that he thinks the biggest trend of 2024 will be Bitcoin. Chamath was an extremely early investor into Bitcoin. He was first introduced to Bitcoin in 2012 by two friends. At one point between the three of them, Chamath claims they owned 5% of the total Bitcoin supply. His average buy price was close to $100. In his latest podcast episode, Chamath explains why 2024 is going to be the most important year for Bitcoin since it was created. He believes 2024 is the year that Bitcoin truly sees mainstream adoption. Chamath is at the forefront of technology and artificial intelligence innovation, yet even so, he believes Bitcoin is going to be the biggest trend of 2024. Everyone is slowly beginning to pay attention. In this video, we'll be looking at why Chamath had such high conviction on Bitcoin from so early on. First with a clip from him in 2012 and why he's so bullish on Bitcoin back then. His reasoning back in 2012 is even more relevant today. Then, make sure to stick around to the end of the video where Chamath explains why he believes Bitcoin is going to $100,000 before eventually hitting $1 million at some point in the next 20 years. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now here's Chamath back in 2012 with why he has such high conviction in Bitcoin.
That's why I'm a huge fan of Bitcoin. I mean, I'm very, very long Bitcoin. People ask me, on Twitter, I got into a long conversation with a guy over the weekend, and he asked me what my favorite Bitcoin companies were, and I said none. I said, right now you just want to own the underlying commodity. Like Google didn't choose to be in the USD, US dollar business. Google is a business that's amazing that just happens to get paid in US dollars. Yeah. Similarly, I'd rather own Bitcoin than try to find the onesie-twosie guy at the edges right now. Now, over the long history of time, there will need to be on-ramps and off-ramps, and companies will be successful. But in the short term, owning that currency and allowing water to find its level, particularly in the developing markets, is huge. And if you don't think that this thing is going to rip, when Brazil goes through a devaluation, when the Indian rupee continues to get crushed, when you have all of this money trying to get in and out of these countries where there's massive, political instability or monetary or financial instability, you're being naive. It doesn't matter what happens in the United States. It doesn't matter what happens in Japan. It doesn't matter what happens in the EU. It doesn't matter. It matters what happens in Argentina, in Venezuela, in Kenya, in Brazil, in India, in Russia, in China. And when you look at where all the activity is, it's in all of those markets.
Yep.
This will be born out of a people's desire to have unfettered access to capital. Yep. So again, on that sociological theme, that's another area which I like. Look at what the Nazis did during World War II. It's disgusting. If you had ways to protect and hide your wealth, your hard-earned money, I mean, I think it's a really profound, important thing.
And
so hold on, just so we know and can feel bad about ourselves. You're accumulating it at what price?
Well, my dollar cost average is around 100 and something.
And you've held it, everything you've bought?
Well, at one point, myself and so I was introduced to it by a person. I asked him if I could disclose his name. He said no. But he, myself, and another person, all three of us relatively well known in the Valley, we started. At one point, we owned almost 5% of the entire float. In 2013, we've sold, they've sold, et cetera, et cetera. I wish we had kept it all. We didn't. It's fine. But then I wrote an article, and I said, you know what? there's so much asymmetric upside here. This is a thing that either goes to, at the time I said, roughly the value of gold. And at the time it was about $100 a coin. And so there's very little downside. There's all this asymmetric upside. I said, take 1% of your net worth and buy this schmuck insurance. And it's a schmuck insurance in this kind of very elegant, beautiful way.
I missed
That
it.
was at
I missed the
$100.
schmuck insurance.
That was at $100, though. What would I actually started hearing from people that I know very well who don't often invest, who are now asking me if this is the time to invest.
buy the schmuck insurance now.
Here's the thing. This is now a confidence game, right? There is no real utility in this. This is a fantastic fundamental hedge and store of value against autocratic regimes and banking infrastructure that we know is corrosive to how the world needs to work properly. You cannot have central banks infinitely printing currency. You cannot have folks with, misguided and misdirected monetary and fiscal policy.
We've done okay.
You just called it a confidence game, which is a con game.
And we've done okay.
That's a
The
con
economy's
game.
built on central banks and built on fiat currencies, where you said yourself how much better life is in every respect than it's ever been, and that's with that as a infrastructure.
So we've seen the first few chapters of this, and now we have to go through this great unwind, right? When all this liquidity now, what happens?
see what happens,
We'll
right.
see what happens. And so all I'm saying is to have the ability to hedge that out
Right.
in a way that isn't fundamentally correlated to the people and the infrastructure that made those decisions that we were not a part of fundamentally, I think is a smart
But
thing.
the point is, if you haven't jumped on this bus or train or whatever
So
vehicle you want to describe it as, has it left the station?
No. So here's what I would say. The same way that I said in 2013, put 1% of your net worth into Bitcoin, I will put myself out there today. I think this thing is $100,000 a coin, probably in the next 3 to 4 years. And I think it is, in the next 20 years, $1 million a coin. So there you have it.
You're telling people to put 1% of your net worth.
At the time.
That's for.
Now it's
that's
a lot
for-
harder.
But that's for people who have money to play with. I mean, if you're talking to an average retail investor who's looking at this, somebody who's trying to figure out, should I put it in my 401k or should I put it in Bitcoin, you would tell them what?
Well, I don't think that's the actual trade-off. In your 401k, so for example, in your IRA, you
Chamath,
can...
I'm saying that there are people who have to make decisions about these things
I
who
know.
aren't fully invested in
No,
the 401k.
So what I'm saying is I own a lot of Bitcoin in my IRA. It is possible. So I did take a small percentage and I put it in there. All I'm saying is there's a small
God bless
percentage
him
of
to do it in
everyone's
the most
net worth.
tax-advantaged way.
Absolutely.
But you have money to play with.
No, but what I'm saying is you could buy the S&P 500 index, buy 99% of that. So if you have $100 to invest, what I'm saying is
Put $1.
put $1. And the reason that $1 is so valuable is that it is fundamentally not correlated to the other 99. And just on the off chance that all the people that manage the 99 may not totally know what they're doing, the $1 may actually save us all.
So there's Chamath Palihapitiya's vision for Bitcoin. It's clear that his predictions and beliefs about the cryptocurrency's potential are not only ambitious, but also deeply rooted in his understanding of market trends and technological advancements. From his early investment days to now, Chamath has consistently seen Bitcoin as more than just a digital asset. He views it as a transformative force in the world of finance and technology. Remember, Chamath's insights are based on years of experience and success in the tech and investment sector. However, as with any investment, it's crucial to do your own research and consider your financial situation before diving in. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.